What's good, YouTube? Welcome back to another trade recap video. In today's video, I'll be going over the price action from Monday, December 29th. Today we had a clear bearish bias on the day. So I'll talk about the short setup that I ended up taking and winning, but more importantly, and the bigger takeaway from today was the short setup that I faded. So yeah, all right, boys, let's jump right into it and I'll see you there. All right, everybody. So I have 9:30 a.m. pulled up, New York a.m. open, Eastern time, and always starting out with the higher time frames to get the bias and the direction on the day. So let's get directly into the day here. I'm gonna hide these drawings. So going into the day, looking at the 4-hour and the 1-hour time frame, I'm leaning pretty heavily bearish on the day. And the reasons for that right here is we have this really high time frame SMT on the daily chart. So you can see this SMT right here. I'll show you ES as well. ES took out this high and NQ failed to take out this high. So that's reason number one, I was leaning bearish on the day. Going to the 4-hour time frame, I'm going to get rid of my drawing so you can see everything a little bit better. You can see this 4-hour for value gap that we have disrespected. We have the SMT at the highs, and then we are now creating 4-hour bearish for value gaps and putting my drawings back on the chart. We have this obvious sell side liquidity at the lows. And the 1-hour time frame, just to show you, is telling pretty much the same story. So going into the day, the bias was bearish and I was leaning bearish for these reasons. And now we got market open right here. I know everything looks like a mess, but I'll explain everything here. All right, so I have market open right here. So with a bearish bias and leaning bearish on the day, what I want to see from the chart is some sort of open, high, low close, some sort of sweep of liquidity from any one of the highs that I have marked out, or a continuation model short from a 5 or 15 minute fair value gap. So that's what I was looking for going into the day. This 15 minute fair value gap right here, we had printed, and this was one of the first levels I was looking to take a short off of. And I'll play that out right now. We ended up reacting a little bit, but never got a clean setup to the lows. So playing the price action out a little bit more. We go to the next level, sweeping out this 1-hour intermediate high. I'll show you that guy. I'll show you guys that now. So this high right here is inside of this 1-hour for value gap. That was a level that I was interested in taking shorts off of as well. And then I'll also show you this 1-hour for value gap. So I have this 1-hour for value gap marked and this 4-hour for value gap marked. So that's what these levels are marked out as. So this is kind of perfect already. We make a move higher, sweeping out this 1-hour intermediate high and this 1-hour for value gap. Now there's no clean setups in here to take shorts off of. This is the 30-second time frame. And as you can see, there's this inversion right here, but no clean setups in my opinion. So now just waiting to see how the market reacts. We're making this move lower right here. We sweep New York AM low, created a new New York AM low, but you can see we left this sell side liquidity, really obvious sell side liquidity intact. So there's still draws lower. And then this is the more external sell side liquidity right here. So that's good in my case. Right about here in the market, I'm looking for a retracement into this 5-minute fair value gap that we printed right here. And this is where I want to get interested into the market in taking shorts, because you got to remember, I had my bearish bias on the day, and we did sweep out this low right here, but we left a prominent low on NQ and ES. It wasn't taken out yet. So that's kind of what I was thinking right here for this trade. I will get rid of this 15-minute now. So right here, we tap this 5-minute for value gap. And this is the first point of interest of what I want to talk about. This right here. Okay. So this is a tap of a 5-minute for value gap. It was exactly what I was looking for, in line with my bearish sentiment. Here's what it looks like on the 5 minute. Here's that fair value gap that we printed. And here's the 1 hour high and the 1 hour intermediate high that we swept. So my entry model is the high time frame inversion in the current leg. And as you can see here, right when we tap into this 5 minute, in the live market, this was all like really fast for me. So we ended up getting this 30-second inversion. And I'm trying to look at all of the time frames, 1 minute, 2 minute, 3 minute. 30-second to 5 minute is all the time frames that I'm looking for. And so I'll quick run through all the time frames. Here's the 5 minute, the 4 minute, the 3 minute, 2 minute, 1 minute, and 30-second. There's really no higher time frame fair value gaps to inverse that were advantageous to me, if I said that word right, or that like looked good to me. So the 30-second happened fairly fast is the point I'm trying to get across. And right here, the 30-second popped up. And I was late to my entry. So I'm like noticing it about right here. This candle forms, then boom, we get another displacement candle. And this is where I should enter the trade. And like the intro said, this is the trade that I actually ended up fading. And I'll talk about everything as to why. So boom, this is where you should enter this trade. It's a beautiful setup, honestly. But so I was late to the entry, and this is what I want to journal for you guys, and mainly for myself though. Since I was late to this entry, I'm not used to entering a trade at all, like on a pullback if I missed my entry, if that makes sense. So this is where I need to grow, and this is what I want to document for this specific trade today. But since I was late to my entry, I was deciding whether or not I should enter the trade if I can get a pullback to the trade entry area. So somewhere in here. And so luckily for me, I actually trade with my trading bro. I trade with someone on Discord every single day, and we bounce ideas off of each other. We trade very similarly to me. He trades very similarly to me, and it's a very good thing that I've had in my life. But this kind of points to one of the main topics I want to talk about today. So one thing that we were discussing looking over this trade is he mentioned, yo, this could be FOMO. Like, we're always trying to look out for each other. It's a very good thing. I want to like make that clear and point that out. So with us looking at this and saying, ooh, this could be FOMO, in the time, that's personally what I made the decision to do. And I faded this trade. But that brought out a greater opportunity for me to realize hindsight, and for my buddy to realize hindsight. So this moment brought out a great opportunity of, as we both trade together, and this is the lesson I want to take away from this myself, but I need to be able to have the confidence and use my own personal discretion myself to take trades just based off my own confidence, if this makes sense. Looking back on this video, I would hope I made improvements in this certain area, as I feel like it's somewhere I need to grow in. And it's a very hard topic to explain, but I was very confident in the break-even level, which I'll explain really quick. It was just this 5-minute fair value gap right here. So we created a 5-minute fair value gap. So the trade idea, the whole process would be, we tap a 5-minute, we take the 30-second inversion, we go break even at the 5-minute, and we target this 5-minute. So it was a very beautiful trade, and it was in line with the overall bias. It was everything I was waiting for the entire day. But the fact, looking back on this now, the fact that I skipped this trade because I was late to my entry and because it could have been like FOMO, is now I'm going to take this opportunity to grow in my own personal discretion, not because of anybody else or any external reasons at all. I need to be confident in my own discretion, because with the 30-second, something that I learned is you're going to be inherently late to the entry sometimes, because the 30-second happens so fast. Just because you're a little late to the entry doesn't mean the whole trade setup is suddenly invalid, if that makes sense. So the trade that I faded today mainly brought out that I want to trust my own discretion. I want to somehow learn to trust my own confidence in my trading ability with my current level with where I'm at, and try to just improve in that category, if that makes sense. So that's what I want to take away from this trade. So this trade was beautiful. It ended up playing out, and it was a trade setup that I faded due to, like, quote unquote FOMO and just not being fully prepared for the situation. And this is where I can grow from it, just all the previous reasons I just discussed. But moving on from this trade, it hits break even, it hits a 5 minute, and I'll go to the 1 minute just so it skips a little bit faster. This video might be a little bit more raw, and I might not be able to have as many cuts, but that's okay. All right, so as you guys can clearly see, now we hit this new 5 minute, and I'm going to delete everything prior to this just so the chart's a little bit cleaner. Looks pretty good. Okay. So we create this new 5 minute as we're on the way down to all of the draws of liquidity, being current New York AM low, this sell side liquidity right here, and then this is the external sell side liquidity from the higher time frames. I'll quick show that again. Looks like it's a 4-hour intermediate low too. Okay. This is good for me. We create and print a new 5 minute fair value gap. And since the draws of liquidity are still intact, excuse me, I was looking to still get in on this trade. Jeez Louise, I don't know what's wrong with me. Okay, so we do make a healthy pullback into the 5 minute that was also near equilibrium of this current trading leg. And then I do get a 30-second on what I saw as good new structure, this nice displacement candle, and this 30-second inversion. So this is where I actually take the trade that I won short on today. This is where I enter the market, and it was a simple stop loss at the high, targeting low-hanging fruit. It would just be this current low, because this trade was already like a high RR trade. And I try to have a lower RR, higher win rate style. So this is where I get in on the trade. There's no really break-even level I had. Since I was confident in the bearish bias, I was honestly expecting this level to be ran, this level to be ran, this level to be ran, and then I was expecting all of these lows to be pushed towards and ran through. Unfortunately for me, as you guys can see here, after I got my 30-second inversion set up, after we tapped the 5 minute, the continuation model, we started chopping around for a very long time. I was in this trade for a mucho gusto, a long time. And I've kind of noticed this during bad price action seasons, I guess. But as you can see here, entered the trade right here, and I was just in this trade until like past 11:30 Eastern time. So I was in this trade for a while. But I actually ended up closing my position right here when we created the SMT. That's just a part of my strategy. So the target for this trade was this current low, and the stop loss was here, no break even level. So I was in this trade this whole time through this chop. And then right when ES took out this low, I will show you guys that right now. As you can see here, this is when ES created the SMT. So right here on this candle, we took out the low, created an SMT momentarily, I guess I can say. But whenever we create an SMT at like my targets, 99% of the time, I should close my position based off what I currently know. Unless maybe I'm really confident in a trade setup. But after being caught in this chop for a really, really long time, I was totally okay with closing this setup being in December price action, if that makes sense. So that was the second setup of the day. This is the one I actually won on. It was an eval trade only because it's December and I'm not trying to put risk on my funded accounts until the start of the new year, probably. I think that's a smart move. But yeah, so this was only taken across my evals. And I'll delete that now too. Actually, I'll leave that up. Okay, so those were the two short setups of the day, and then by then, like, the session was obviously over. I was actually into this trade past my session time, entering in like 1 to 2 minutes before my session was over, actually. So I was on the charts a little bit later in the day today. But yeah, those were the two trades I wanted to talk about. The first one that I faded, that brought me a huge lesson of learning to trust my own discretion and learning to trust my own confidence, I think is such a vital thing that me and my bro realized today, like together, both for ourselves, is you can trade very similarly to somebody, but you'll never see the market the exact same way. And this is something I realized today because of this FOMO example. So opportunity number one is for me to grow in my own confidence and discretion. And the trade number two was just a continuation model short towards the intact draw of liquidity, if that makes sense. So that's what I learned from today. Moving forward, today is Monday. The rest of this week is probably going to be a no trade week for me, due to New Year's Eve, due to New Year's Day, and tomorrow's Tuesday being, I think there's news tomorrow, but I don't think it's going to be good price action. We'll just have to see. Oh no, tomorrow's FOMC. Tomorrow's FOMC, and I previously journaled that I won't trade before FOMC because I've gotten my probability hasn't been good, I guess I can say, pre-FOMC. So I won't trade Tuesday, won't trade Wednesday, New Year's Eve, Thursday, New Year's. Friday is a no news Friday, and it's the day after New Year's. So we'll have to see on that one. Going into next week, the lessons I learned from this week, I know I said it a lot, but learning the process of trusting my own discretion, trusting my own confidence as a trader, and just continuing to stick to my rules for the continuation model number two. But yeah, I hope you guys enjoyed the video. If you did, please like, subscribe, comment down below. Comment down below how your December price action is going for the models that you trade, because I'm interested in that with how it's been for me. It's not been the greatest or the best. Yeah, so most likely I will see you guys next year, I guess. I'll see you guys next year. It's that corny joke. But yeah, thank you for watching. I'll see you guys later. Peace.